Well, for more on what's playing out in Europe, let's talk with Dr. Stephen Nash from FIG Securities in our Sydney, standing by at his Sydney camera this morning. Dr. Nash, a warm welcome to you as always.
Thanks.
Let's just talk about this, I suppose, claim by some inside Europe that things are going to be resolved. That first off has to be front and centre amongst our considerations. Do you kind of find these latest claims credible?
Look, it's a very difficult question, Carson, to answer really in detail. I think the call for sustainable growth in Greece is a good one, but there doesn't seem to be a plan about increasing productivity growth in Europe. I think that's going to be the key to getting out of this problem and also creating sustainable growth. There's got to be adjustments to wages. There's got to be reductions in labour costs broadly. I think that could really assist growth in Europe, and growth is the central problem at the moment. We have, as you know, a concern about US growth, which is placing the pressure back on Europe right now. So I think part of the package of measures should be a productivity package, particularly in peripheral countries, to reduce labour costs and increase growth and reduce unemployment there.
That's the peripherals. What about some of those core nations like Italy, who are talking out the language of austerity?
Yeah.
There's nothing kind of baked in there when it comes to growth, or is there?
In the case of Italy, these ideas of productivity also apply. I think that it's going to be difficult for Italy to really lift growth at this stage, like most of the other European countries, except if they go for lower wages and increased productivity. I think that's the essential route that people should be investigating, and unions have got to be involved in this, and there's got to be adjustments. I think that's the only way forward right now.
What about the way forward on actually funding all of this, though? Because you've had EC President Barroso saying overnight that plans for a common Eurobond would be presented shortly.
Yeah.
Is it really fair to believe that you will get German agreement on all of that?
Look, at this stage, it's looking difficult to get the Germans across the line on that idea. I think, look, it would be a really good idea. The problem is we're moving at these things very quickly, and the bureaucratic procedures take quite a while. I think it would be good to get a pan-European bond that all the European countries could issue through. It would reduce borrowing costs dramatically, and would issue a lot of benefits to the various countries. So it's a logical step, but then again we have issues regarding fiscal unification. I think the Greek example is one where European officials didn't properly audit the figures, and I think that's got to be fixed, and I think that's already occurring. So if compliance can be gained, then I think that this is a possibility, yeah.
That is a big if, though, isn't it? Because you could otherwise say that Germany is just letting Greece off the hook.
To some extent, but really this whole issue is really not about Greece. It's about the banking system. I think we've seen that recently with regard to the French downgrades of the banks. So it's a wider issue. It's really Greece is the small part of the whole picture here.
Do you see, though, the prospect of a market that's sort of getting almost ahead of itself? It's rallying on Barroso optimism about common euro bonds, and yet, Barroso said just whilst he was in Australia a few weeks ago that Europe was pretty much fine and dandy. I mean, the guy's not exactly got a stellar track record of late.
Exactly. Look, I think in terms of the market getting ahead of itself, I think you could argue that it's got ahead of itself with regard to bad news. We had the downgrade. The CDS market really didn't do much. If anything, rallied. I think everything's really, in terms of bad news, is right in there right at this stage. Exposure of the French banks to Greece is there, but it's limited. So I think there's possible upside with regard to some of these French banks, and also some of the spreads that are out there. Competition for funding in the next funding quarter will be intense, and that's going to lead to issues with regard to Australian bank funding as well. So I think in the next few months we're going to see some interesting issues from Europe. Yeah.
Well, domestically, issues that we need to just quickly tick off. We know in the state of New South Wales, the Baird government, the Baird Treasurer at least, Mike Baird, talking about Waratah bonds, the uptake there if you could, and finally your thoughts on current asset allocation for investors.
Look, in terms of the Waratah program, it's been a fairly modest uptake right now. there may be some inflation-linked annuities coming out in that program, which I think will be very interesting for retail investors. With regard to the asset allocation, I think there's been a few articles of late by Chris Joy and Don Stammer about how overweight the Australian market is to equities. There's not enough bond allocation, and I think there's been quite a few others that have commented on that as well. So getting a bit of interest rate risk in your portfolio, particularly if you're getting paid 8 to 9%, is really something that people should be looking at right now.
Right, Dr. Nash, continuing to promote that. We will talk with you very soon. Thank you so much. Have a good day.
Thanks a lot.
Stephen Nash there from FIG Securities.